Coming up in today's video, you have oil gapping up higher here on the Sunday open, up almost 8% at one point, followed by escalations in Iran. You have safe haven gold as well gapping higher, but now giving back most of its gains here. Equity indexes initially opened lower, but now they're green on the day, which is very interesting. You have the Swiss franc and the yen not acting as safe havens, and surprisingly, you have the dollar taking the lead role as the ultimate safe haven in this environment. Also, not to mention, you have Bitcoin here seems to be reviving from the dead, up 5.2% on the day. Everyone, Alan Perez here, and in this video I'll be talking about what is moving markets, my current trade positionings, how I plan to manage them, and new possible trade ideas that I'm looking to take. Like always, this is not financial advice. I'm just a random guy on YouTube sharing my thoughts and opinions and how I plan to navigate the markets. So without further ado, let's get right into it. We'll start off with the culprit behind this entire move here, which is oil. Oil gapped up here on Sunday, up almost 8% on the day at one point, and it's now giving back most of its gain. It's still up 5% here today, but the real question is this going to continue with some follow through, or are we going to trickle back down and fill this gap here? Well, first let's talk about why oil is up. For those that have been living under a rock, US and Israel had a double operation attacking Iran and ultimately killed the supreme leader as well as other high-ranking officials. That caused a risk premium to get priced into oil, as there was a lot of fear with supply disruption. Recently, over the weekend, the main route, the Strait of Hormuz in that region, responsible for 20 to 25% of the world's global oil trade, was actually put on halt. So Iran basically said no ship is going in and out of this route until further notice. Now, Iran doesn't own the land or own the canal by any means. However, they do have some influence in the area. That, of course, caused a trickle effect into oil dynamics. Insurance premiums for those oil tankers went up dramatically there. You also had the daily rates for those shipping tankers skyrocket dramatically. I believe last time I checked, the fee is $452,000 a day to be out there. And so the big question is this going to continue? And if so, how much higher can oil go? And what are the effects of that? In my opinion, markets are extremely smart and efficient. And the reaction that you saw on Sunday's open was basically the pricing of the current supply risk. So if you want to see oil continue past that initial $75 top, you would need something fresh and new to go ahead and send oil higher. I think as of now, the easy trade is behind us. If you were in oil long, fantastic. You got lucky, oil gapped up in your favor, try your stops and call it a day. Unless you see further escalations or a drag out of this war, then oil will most likely chop around that recent high and the most recent breakout level of the $68 handle. So let's talk about the market reaction and the trickle effects and why markets are trading the way they are today. There's a couple things going on specifically. We'll look at the dollar and why it's actually being the king of safe havens today. For starters, the dollar was already trading pretty good here leading up into the end of last week because the US was showing some improving fundamentals. Now the breakout is sustained because the US is actually a safe haven in times of war, especially when the US is involved because America is the world superpower. Now if oil continues to stay higher for longer, dollar has a lot more room to go. In my personal opinion, I'm thinking 99.5 or even 100 or 100.5 on the dollar index. Why? Well, for starters, oil is a leading indicator when it comes to inflation. A lot of the goods and services that we use as Americans and around the world require oil. Think about the grocery stores, for example. All of that food being delivered is mostly delivered by truck. And so when transportation costs rise, that's passed on to the consumer, and that is inflationary. Higher inflation means higher yields. Higher yields means higher interest rates, and higher interest rates means liquidity is a little bit tighter. You can see the US 10-year yield is up on the day 2.71%. If we see this trend continue, then yes, we will have dollar and rates higher for longer. If we get that close above that 200-day moving average, my next target will be this 99.5 here, coincided right here with this level of what could be resistance. And if we go beyond that, then I'm looking at the 100 handle, 105 handle here. So what happens now? Well, at the moment here, nothing new has happened. And in my personal opinion, I do think that oil kind of mean reverts here and trades to fill in this gap here and stays above this breakout level here. And until we see something new, an escalation or de-escalation, I do think that oil will go ahead and chop around between the $75 handle and this $68 handle here, just range bound. And as for new current trades, I don't plan on taking any new trades. However, I do have two trades up and running at the moment. I have euro dollar short and I have dollar CAD long. Both trades are in profit, and let me go ahead and break them down here. So for the euro dollar, I was actually shorting prior to this weekend, not because I thought something was going to happen overseas, but more so because the US was having some improving fundamentals, specifically with the labor market. So the labor market in the US went ahead and improved, which was one of the weaker points in the US. So I went ahead and shorted the euro dollar, and of course this weekend happened and we saw a gap down here in the euro dollar and some continuation following. Now specifically with the euro dollar, why it's hurting so much against the other peers, you can see that it's the second highest loser here on the day, and a lot of it has to do with the current situation in the Middle East. So at the moment, the euro is getting hit from both sides. On one side, the dollar is catching a bid as markets move into risk off. On the other side though, they have an already fragile growth backdrop. What basically happened is higher oil and energy prices can push inflation back up, which is kind of good for the currency, right? However, weaker growth, tariff uncertainty, and rising input costs all weigh on the economy. So that leaves the ECB between inflation risk and slowing growth. And that dynamic makes the euro dollar less attractive. So you add all that plus a US dollar that is already strengthening because it's being a safe haven, and you see why euro dollar is down more than 1% on the day. So with this position here, I'm going to just trail my stops and let the market take me out once this thing reverses. The dollar CAD is being a slower relative performer compared to the other one, mostly because the Canadian dollar is somewhat correlated to oil. So when oil does well, the Canadian dollar does well. And at the moment, oil is obviously doing pretty well. Now, it's still up on the day because it seems like the US dollar safe haven bid is overriding that dynamic. So for now, I'm just going to go ahead and put this at a break even, have no loss, no risk whatsoever. And I'm going to do the same thing with the euro dollar, just trail my stops as it continues higher and just get taken out when the market starts to reverse. At the moment, I don't have any new trades that I'm looking to add. I don't want to add to my positions either, just because I'm already correlated in one direction, which is long dollar, and it's working out pretty fine here. I will be open to taking a contrarian stance if we start to see the right things, but for now, as there's no new news, no escalation or no de-escalation, I can't really act on that yet, but I'll definitely keep you guys informed if that starts to set up. And that's it for today's video. Thank you guys so much for watching. I truly apologize for being absent this last week. I was moving across the country, so I had to pack up, move, drive down here, and get set up here. And now I'm happy to say that I have a fully fledged studio here that I can produce awesome content for you guys. So I'm really excited for this next chapter. Thank you guys so much for watching. Have a blessed rest of your day, guys. And as always, trade safely. Bye-bye.